There are now a mountain of homes for sale on the U.S. home building market. In fact, we have the highest home builder inventory that we have seen on record in the South, and we have the second highest level on record across the U.S. This home builder inventory is especially pronounced in Florida, where we have a lot of home builders offering quick move-in homes, often at steep discounts. And in this video, I'm going to explain to you all what this means for the housing market and why it's actually going to be good for you as a home buyer. Now, the community I'm walking around in right now has around 10 quick move-in homes for sale. You could see that based on the for sale signs behind me. They say there's a special interest rate available for the home, and there's just a lot of these quick move-in homes available for sale from this builder. You can see even more over here. Now, with so much inventory, these builders are slashing prices. Most of the houses in this community have price cuts, and I went to some other new builds in this area and found one that even cut the price $100,000. And so we're seeing this oversupply of builder inventory in Florida and the rest of the South translate to lower prices, which is good for you as a home buyer. There's more affordability being restored to the market. However, I do have some concerns about what this oversupply of housing from builders means for the housing market overall and the economy overall. Because you can see right now in the South, everyone, there's over 300,000 new homes for sale from builders. That's according to the U.S. Census Bureau, and that's a record number of homes for sale in the South, even more than the 2006 bubble right before the big crash. And so when you see so much excess supply, yes, it's good news because prices are dropping, but it could potentially be bad news and that we could be on the doorstep of a bigger housing market correction and or recession. And the houses here, they're for anywhere between 290,000 to 330,000, 340,000. And I'm actually in Central Florida right now. I'm in a city called Fruitland Park, Florida. We're about an hour outside of Orlando, and this is a community where a lot of people have moved over the last couple of years because maybe they were priced out of Orlando, so they moved up here. Maybe they wanted to be close to the villages. And the resale housing market here is actually pretty tight. There isn't a lot of resale inventory, but there is a lot of builder inventory. And you can see we might even have some more new homes coming in the future here. You see that there's a lot of grass, and you see maybe they're starting to do some utilities here. So we could have even more homes in the future. But first, I suspect they're gonna have to move some of these homes that are already completed. And one thing these builders are doing to sell these homes is they're offering cheaper mortgage rates than market. This is an important thing to understand if you're looking at buying a home right now, is that you'll often see the builders advertising special low interest rates. Now, if you're advertising a special low interest rate as a builder, sometimes they'll cut the mortgage rate, down from 7 to 6%, or maybe in some cases 5%. Sometimes they'll do that for even the whole loan term. So your mortgage rate buying from a builder might be less than just buying in the market overall. And that's one of the ways the builders are trying to offer more affordability to the market. Here's another home for sale. Here are some more homes for sale, some more quick move-ins. We found another home for sale here. So that's around 10. And we even got a home for rent here as well. In particular, one builder that's done some big mortgage rate buy downs and price cuts is Lennar. Lennar has cut their net price 23% from peak, and they're kind of signaling where the market is going. And I want you guys to think about the home builders in this way, is that they're kind of a leading indicator for what's happening in the housing market. So when you see the builder inventory go up and you see the builders cut prices and they offer big mortgage rate buy downs, they're showing you what has to happen for home sales to take place. And I believe what the builders are indicating, especially in a market like Florida, is that we need to see prices drop 20%, and that we need to see mortgage rates go from 7 to 5 or 5.5. Oh no, it's okay. Quick question. I just was noticing there's like lots of homes for sale in this community. Has it normally been like that, or is that more recent?
I'm just doing DoorDash, so I'm not real familiar with it.
Fair enough.
To Lake County, I'm very new, like less than a year. So
Oh, where'd you move from?
Volusia County.
Where?
Volusia County.
Where is that?
Like Blackberry, Deltona.
Ah, I see. Yeah.
There's a lot of, I can tell you, door dashing in all the areas that I do around here. There's a lot of upcoming developments. And a lot of because it even will throw me off with the GPS. It'll tell me to turn on streets that are only half streets because
they're not even in the map yet or something like that.
Right.
So is there even, so you think there's going to be even more homes coming, or?
Like Wildwood has a lot of growth.
And you know, there's a metric that's kind of concerning me, everyone, and I want to bring this metric up to you because I think you guys out there as home buyers or investors or sellers, you need to understand what's actually going on in this market. And this metric that I'm going to discuss to you is called months of supply. And it's the months of supply on the market on builder lots in the US. And what we can see here is the months of supply in May 2025 was over 9 months. It was actually 9.8 months of supply in May 2025. And what that means is that it would take 9.8 months at the current sales pace to sell all the inventory that the builders have. And what's interesting is that 9.8 months of supply, it's way above the long-term average months of supply, which is around 5, around 4.5 or 5 is the average months of supply. We're almost double that today. But it's also the 4th highest months of supply that we've seen in the last 50 years. So we are in a unique period right now with how much these home builders are building and how many homes are available for sale. And what's even more interesting is the other periods where we had this months of supply excess, we had a recession shortly thereafter. Because again, when these builders build so much, it's kind of a signal of this overcapacity in the market. The buyers aren't really there to support the building pace. And then at some point, what tends to happen is the builders will eventually start laying off construction workers. Now, we haven't seen that happen yet. The builders continue to build for now, but one just has to wonder, with that months of supply so high, is it a signal that we're about to see an economic contraction in the home building market in addition to just the housing market contraction of lower prices and more inventory? And so a good question to ask at this point is, like, if you're a home buyer or investor who wants to buy right now, and I've polled you guys about this question, roughly 17% of you watching my channel right now say you definitely want to buy in 2025. Another 50 to 60% of you say maybe you'll buy if prices drop enough. And another, let's just say 25% of you, you're not buying, have any plans to buy at all. So for the 17% of you that definitely want to buy and the 50 to 60% that might buy if prices drop enough, like, what should you do with this information? And should you jump on some of these opportunities of lower prices? And what will the market do in the next 1 to 2 years if you wait? Because that's a key question to ask. If you wait, is it going to get cheaper, more cheaper in the future, or is it going to stabilize, or is it going to go back up? And there's a lot of people out there trying to tell you that if you wait, it's a bad idea. So a lot of people traditionally in real estate, a lot of realtors, a lot of home builders, a lot of investors, they always kind of want to pressure you to buy at any point in time. Because they say, their argument goes that time in the market beats time out of the market. And that, you know, even if you buy and it dips after you buy, they say eventually the price will go back up. However, what concerns me about this market is that it's still very overvalued. So even though we're seeing some big price cuts, even though values in Florida are down year over year about 4%, and they're down year over year by 10% in some counties, the prices are still overvalued. In Florida, on Reventure App, we have Florida still is 17% overvalued from its long-term norms. Now that's improved. Florida used to be 32% overvalued 3 years ago. Now it's 17% overvalued due to prices dropping and then incomes going up. But that's still pretty overvalued. And what's interesting is that Florida rarely is fairly valued. Like, if you look back the last 20 years, you can see it's a very boomer bust cyclical market. It has periods of big bubbles, like in 2006 in the last 3 years, and then it had a big crash after 2006, and prices in Florida actually became very undervalued during the last crash. So that's an important thing to remember, is that there was a point in time where it was a great time to buy in Florida. And I think we're going to see that happen again. And I think these cheaper prices we're seeing are great news, and that, you know, people in the real estate industry shouldn't attempt to hide this, right? Or shouldn't run from this. You know, you should advertise the fact that you're cutting prices. That's what home buyers want. Home buyers want to see cheaper prices. They want to see more affordability on the market. So these cheaper prices will hopefully make Florida's housing market undervalued again in the future, but we're still not quite there. We're still 17% overvalued in Florida, and there's certain markets that are 30% overvalued. There's other markets that are 7% overvalued. So you guys need to do the research to see the overvaluation rates in your location to help you make a decision about if you should buy or wait, and if you do buy, how much of a discount you need. But if you talk to a lot of, again, people in the industry, they'll say, hey, don't worry about it. A lot of them are talking about now how the Fed's going to cut interest rates in a couple months and how these Fed rate cuts could bring more home buyer demand back into the market. Right now, the Federal Reserve is estimated by the prediction markets to cut rates 3 times by the end of 2025. So we could see 3 rate cuts by the end of the year, bringing the federal funds rate down from 4.5 to 3.75%. And then if you look out into 2026, we see that the Fed is estimated to cut rates down to maybe 3.3 or 3.4%. So we could see over 100 basis points of rate cuts in the next 12 months. And I want to get you guys prepared for that, right? That it seems like we're entering a declining interest rate cycle, at least in terms of the Fed cutting rates. And I think the important thing to remember is that the Fed cutting rates is not a guarantee to reignite the market. It's not a guarantee to bring buyers back in, and it's not even a guarantee to lower mortgage rates. Because remember, everyone, the Fed cut interest rates at the end of 2024 by 100 basis points. And when they did that, the mortgage rate actually went up. When the Fed cut rates, the mortgage rate went up, which is kind of counterintuitive. But the ultimate thing to understand is that the Fed doesn't really control long-term interest rates and mortgage rates as much as they'd like to. Those rates are set kind of by the market and bond buyers and are determined also by how much debt the US government is issuing. The Fed really rather controls short-term interest rates. So if the Fed cuts rates 100 basis points in the next 12 months, the main thing that'll do is lower the interest you can get in a CD or your savings account. That's the main thing that'll do. I don't know if that's actually going to lower long-term interest rates. I don't think anyone knows. But if it does, maybe mortgage rates drop from 6.7% to 5.7%. Maybe we see the mortgage rates have a 5 handle in a year if the Fed proceeds with these rate cuts. And if that happens, it would improve affordability. It would bring the typical monthly home payment for a buyer down from $2,800 to like $2,600 a month. So that would help, but it's unlikely to save the housing market. Because this is the other point to understand, is that the home buyer demand is still very low. So in terms of new home sales from builders, so the builder sales dropped by a lot in May, and they're kind of maybe average to slightly below average based on their current sales pace for builder sales. They're a little bit below right now what they were before the pandemic. But they're not horrible because the builders have brought more buyers back in with their aggressive price cuts. Now, where sales are really bad is on the resale market, the existing home market, where we're talking about people who already own their home trying to sell it. The buyer demand there, the sales activity there, is down about 25% from pre-pandemic norms. And it's down about 40% from the pandemic peak. So the market for existing resale homes is still in the gutter. Like, very few transactions are taking place. It's the lowest buyer demand in 30 years. And so with that backdrop, it's understandable to think that we're gonna need more than interest rate cuts and 100 basis point decline in mortgage rates to bring buyers back. We're gonna need to see prices drop. And again, the builders are showing us that. The builders are showing us what has to happen in the market to get back to decent sales volumes. It's big price cuts, it's dropping the mortgage rates to 5.5 or 6%. If that happens in the market overall, buyers will come back. And I think that's like the biggest thing I want our current government to understand in terms of their thoughts on the housing market. Like, just cutting rates is not going to do it. Prices need to also drop. And I'm actually curious, you guys can let me know in the comments section below, like, what would you need to see to entice you to buy today? We talked about the 50 to 60% of you that, might want to buy, but need the prices to drop. Like, what would need to happen for you to buy today? Let me know in the comment section below. What decline in prices would you need to see, and what mortgage rate would you need to see to entice you to buy? I think this would be very useful information for realtors out there, for the government out there, to look at this from, real home buyers, real prospective buyers. What needs to happen for you to come into the market? I want to hear your guys' thoughts in the comment section below, because this is a really important question for us to answer. And if you are someone actively in the market right now, maybe the 20% of you, 15 to 20% of you who definitely want to buy this year, I would just say, if you do buy, make sure you understand the risk factors of what you're getting into for your market. Understand the overvaluation rate, how overvalued prices are compared to the long-term norm. If they're very overvalued, when you want to be a bit more careful, anticipating that the market is still risky and prices could drop by more. Meanwhile, if the market is undervalued, then you could be more aggressive, right? You know that if the market's undervalued, it's probably not going to have a massive collapse, and that prices, if they are going to keep going down, might only go down by a little bit. Our overvaluation rate is one of the favorite data points of our subscribers, and we have that down to the zip code. So make sure to go to www.reventure.app, search your zip code, start looking at the home value and inventory stats, and then upgrade to see our overvaluation rate for your area. The cost of seeing this data is only $39 a month, or $399 a year. I know that last number might sound expensive, $399 a year, but it's less than 0.1% of the cost of buying a house, and it could ultimately save you a lot of money in the process. If you've been waiting to sign up for that Reventure Premium membership, now is a great time to do it. Understand that overvaluation rate for your zip code, your county, your metro. It's going to help you a lot in understanding the risk factors of buying today.